Do I have your attention now? Do I have it? Good. I thought so.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks marched higher on Wednesday as Wall Street returned to rally mode while investors digested the latest Fed Reserve minutes to provide hints to future policy amid a shutdown driven by a dearth of data. And guys, stocks were largely green, driven by the mega caps, driven by tech, driven by software. We'll talk about why that is, but just understand that semiconductors were very, very green. Nvidia up, AVGO up, but the broad semiconductor space up even more, guys. Have a look at this. AMD up 10%, MU up 4.8%, Texas Instruments up, NXPI up. Very, very strong momentum that carried into the computer hardware names, the software names as well. Not so much the CRM software names, like the customer relationship management names, but, the software names that are really going to benefit from AI. Apple was up 0.58%. The infrastructure names always will rally when these semiconductor names rally. They're kind of related, like, for example, the cybersecurity names. If you're building a massive data center, you need cybersecurity. Microsoft was flat here. Amazon and Tesla were up both 1% lifting the discretionary space, but the broad discretionary space actually down. For example, GM, Ford, a lot of automakers got bad news today. Home Depot, bookings holding. This entire sector was red. But again, the big boys kept the pace. Meta was gained ever so slightly. Google fell, which meant com services was kind of flat today. And then it was mixed price action through and through. Consumer defensives were red. Industrials were kind of green. Financials pretty much red. This is what the market looked like on a sector analysis basis. You can see financials, com services, staples, real estate, and energy actually fell here today, and even energy falling just shy of 1%. Real estate as well. The big sector here is actually just the consumer. The big sector here is actually the communication service sector, and that was down 0.5 percentage point. The S&P 500 gained 0.5%. The RTY gained 0.64%. Gold was up 1.37%, and the best performing sector here was actually the XLK, the technology sector, up 1.49%. And we'll talk about why that is. But through and through, a lot of the market momentum today was driven by growth. You can see small cap growth, mid cap growth, large cap growth, all up in excess of 1%. Small cap core also participated in the fervor today. And then the only red sectors were value in the mid cap and large cap sector. So all in all, if you just invested in the market today, your portfolio was very, very green. Growth, core, large, mid, small. Either way, the portfolio saw gains. And this is coming on the 8th day of the government shutdown. I know this says 7th. We are officially on the 8th day here, guys. Day number 8. And things are not ramping up, but they're not cooling down either. Trump came out and said that he's going to threaten to withhold back pay for furloughed government workers. Democrats are not going to like that. There's news that the Democrats might cave. I think we're going to see some real movement this weekend. It all depends. Nonetheless, no movement as of yet in Washington. And guys, despite the government shutdown happening, your life has not changed. This is telling you the government is completely useless. Another market mover, probably one of the biggest things that moved the markets today, was the Fed minutes. When the Fed minutes came out, the market moved to session highs after its latest policy meeting signaled more rate cuts could be in play for the rest of 2025, even as they also hinted at steep division within the central bank. Quote, participants expressed a range of views about the degree to which the current stance of monetary policy was restrictive about the likely path of future policy. Most judged that it would be appropriate to ease policy further over the remainder of the year. That's what the minutes said, end quote. And what also moved markets today is the fact that XAI raised $20 billion in its latest funding round. Nvidia contributed $2 billion to that, among others. So we continue to see this circular funding, coupled with the fact that we probably are going to get rate cuts as per the Fed minutes. This is why tech stocks, small cap stocks, mid cap stocks, and growth stocks as a whole were up today. Nvidia up 1.82% on the back of that news. Very, very interesting. In fact, Tesla, like I showed you in the heat map before, was up 1.2%. So the market really liking this news. Very interesting. These circular financing deals, right? The market does not care, likes them, and it's just onward and upward. And I think that's because there is a positive ROI on these deals compared to what we saw in the year 2000. On the AI front, we also got more news from Dell. Dell shares rose over 8%, adding to their 3.5% trading session yesterday as Dell's Investor Day was released, and its CEO came out and said it expects revenue to grow 7 to 9% annually through 2030, up from its prior range of 3 to 4%. So we are starting to see all of this money in the AI trade impact publicly traded stocks, impact the top line. That's going to flow into the bottom line. And the company forecasts that its adjusted earnings per share will grow 15% or more yearly during that time frame, up from its prior growth estimate of 8%. This is actually a rather minor move for such a massive guidance raise. You think the stock would be up 20, 30% on the back of something like this. But here we are, and this might be a sustained linear rally for Dell. Very good news for those in the AI trade. And then in the credit markets, the competition among credit score data companies continues to intensify after Fair Isaac Corporation's announcement last week that it would begin licensing its FICO scores directly to mortgage lenders. Then on Tuesday, today, Equifax countered by cutting its Vantage Score 4.0 mortgage credit score price to 4.5 for 2 years, so $4.5, undercutting the $10 score from FICO it's offering for 2026. Additionally, Equifax said it will provide free scores for all mortgage, automotive, card, and consumer financing customers who purchase FICO scores through the end of 2026. On the back of this news, Fair Isaac Corporation of FICO was down 8%. Very, very ugly price action. You can see where the news dropped right here. Then Equifax was actually up 1.5%. I think the market really likes this. Very, very interesting. The market actually telling you that, hey, maybe FICO might not be able to weather the storm if it goes up against the credit bureaus. But we'll see how this pans out. At the end of this, it's just simply going to tell us who has more leverage in the industry. Is it the credit bureaus or is it Fair Isaac Corporation, the score provider? And then for everything we saw today, there was 3,700 advances, 2,600 decliners, great market breadth through and through. We saw inflows in the New York Stock Exchange, outflows here in the NASDAQ, with the S&P 500 actually gaining half a percentage point today. The market momentum continues to improve from yesterday and last week, as you can see right here. However, the 5-day and the 20-day continue to be below the 50% mark, and the 50 to 200-day continue to remain above. So telling us longer term we're good, shorter term there might be choppiness. And we saw that today, up half a percentage point today, down half a percentage point yesterday. Short term, we're seeing a little bit of movement, but in the long term, right, linearly, when we look at it 1 month, 2 months, 3 months, 6 months out, stocks just continue to move higher. And that's exemplified by these longer term moving averages. Now, equities are absolutely rallying today, guys. Have a look at this. Large caps, small caps, the equal weighted S&P 500, mid cap, small caps, growth value, everything really green. Now, the outperformer is really the NASDAQ 100 right here and the Russell 2000. Everything else is below that. For example, the equal weighted S&P 500 up 0.32%, mid caps, up 0.89%. In fact, this is actually one of the best performers here, mid cap. So very, very solid day through and through for equities, and also high beta. Look at Bitcoin, look at Ethereum, up 1.75 and 1.59% respectively, holding key major areas of support. You love to see that type of market momentum. Internationally, we're seeing the same thing. European stocks, Middle Eastern stocks, Chinese stocks, Asia stocks, Indian stocks all gaining. Indian stocks actually falling. Apologies, Indian stocks actually falling. And then when we look at some of our macro data, right, volatility, the VIX fell ever so slightly. It's been very, very tame over the last week or so. I think I said that like every single session. The VIX barely moving up or down. The 2-year and 10-year yield not moving. The 2-year yield did gain ever so slightly, but pretty much flat. Dollar seeing a massive, massive move to the upside. Again, on the government shutdown news, I think because the market is starting to sense that, hey, I think we're going to start to see the remnants of a deal form over this past weekend, especially as we are starting to hear rumors that the Democrats are beginning to cave. But we'll see how it all plans out. We do know that our base case for the dollar is for the dollar to actually move higher. We've been saying this for a while now. Everybody said the dollar's going to weaken. We're looking for the dollar to move higher. Bonds, DLT was flat. Gold was up 1.59%. Very, very interesting. And silver up 3%. These two commodities continue to just absolutely move. Now let's go ahead and talk about the S&P 500. This is the weekly chart. We're pretty much at all-time highs if we close the week right now. Extremely bullish. If you go to a daily chart, you can see that, again, we also are pushing all-time highs. I mean, we had a red day yesterday. We paired all of those losses, and looks like we may close at an all-time high for the S&P 500. Or possibly at an equal all-time high for the S&P 500. When we look at the NASDAQ 100, that's probably going to close at an all-time high, assuming we close right now. The markets is still open. There is still about half an hour of trading left, but large caps look very, very strong. When we look at the Russell 2000, not quite an all-time high, but that right there is the all-time high for the Russell 2000. Guys, so we have mid caps at all-time highs, small caps at all-time highs, high beta at all-time highs. When we look at the equal weighted S&P 500, that is the all-time high right there. Just 3 days ago, we made that all-time high. When we look at mid caps, right, the all-time high is somewhere around about here. So, trading at the highs, very, very good stuff. And when you have all of these markets at all-time highs, guys, ultimately there's just strength in this market. All-time highs are bullish. They're not bearish, and you can continue to see this move to the 7,000 mark in the S&P 500. Now, my year-end target, right, at the start of January was for a 669 S&P price target. We actually went ahead and actually reached that. I did not change my price target during the year at all, and I'm not going to lift it higher. I do think we probably finish the year right here, but not before we do get some form of exuberance before we go to the probably 6,900 mark. This is not bullish. We're literally making higher highs and higher lows into all-time highs. You want to remain constructively bullish in 2025, and any dips that do come in the market, you want to buy those dips, because 2026, we're going to see very much of the same. Now, quickly looking at European stocks, we're just going to dive into these very, very quickly. That's an all-time high for European stocks. We zoom out, right? You saw we had a technical breakout above this line right here. This is the all-time high. This is the all-time high for the stocks 600, Europe's S&P 500. It looks like we're breaking out, guys. I could see a $600 SXXP before the end of the year. Very, very bullish. At European stocks, this index still only trades at 13 times forward, right? And there's some great companies in here: Novo Nordisk, ASML, SAP, just to name a few. Now, looking at China stocks, trading at these 52-week highs, not quite all-time highs, because we do know that if we actually just zoom out, right, China's highs are like somewhere into the $100 range, but China stocks trading at their 52-week highs, not quite, a little bit off the highs, but virtually at the highs. I do think we probably see a $50 K-Web sometime in 2026. Now, quickly looking at Bitcoin, you can see it does look like we are constructively holding these highs right here. Yes, we had a red day yesterday here for Bitcoin, but we have a green day today. And ultimately, what we want to see is a retake of these highs and just a continued price action, making all-time highs for Bitcoin. But this is very, very constructive price action. Why? Because if we actually just zoom out right here, you can see we use this zone as resistance, the 109,000 zone as resistance, right? We then use it as resistance right here, broke above it, and now we use it as support twice. We do know that resistance, right, turns into support. That's exactly what we saw today, or I would say this past week or so. Bitcoin rallying off this key support zone into all-time highs. This is bullish. I do think we see 140 before the end of the year for Bitcoin. When we go ahead and look at Ethereum, you can see we are sort of in this wedge pattern right here. Rejected this wedge pattern. I don't like it. I wouldn't be surprised if we actually see Ethereum move lower as Bitcoin continues to move higher, and then we actually put in a higher low, and then Ethereum goes ahead and makes its next move. That being said, I am long. I am bullish on Ethereum, and if we do go lower, I will buy more. And if we just rally from there, all power to me. I am holding Ethereum as well, guys. Now, again, I've been saying this for a while now. The two stocks that I want to own into the end of the year is BMNR. If we do get a pullback in Ethereum, go ahead, buy that dip. You can see we are making structurally higher highs because we put in a low right here, a higher low in the context of making this high, right, with a lower high. So this is not constructive price action. This is constructive price action right here. So what needs to happen is we need to go ahead, break these highs. We did do that this week. Okay, you can see right here, we broke those highs. Now, ultimately, we need to hold these lows right here. If we can do that, right, and move higher, breaking these highs, we remain in an uptrend, right, which would look like that. And then we go ahead, break these highs, and then the uptrend continues. So constructively bullish here for Bitmain Immersion Technologies. The premiums on this stock are absolutely jack. I mean, selling the $60 cash secured puts, you probably get like $5-6 in premium. Absolutely insane. Looking like 1 month, I think, looking out to the 31st of August or the 7th of November. That being said, I'm bullish on BMNR. And I'm also bullish on MicroStrategy. I think MicroStrategy, right, is actually going to hit its all-time high before the end of the year, guys. Let me actually just pull it up. MSTI didn't show up. Here we are. MicroStrategy's all-time high being the $455 area. And if we take a measure move from where we are to there, 39%. I know it seems crazy, but MicroStrategy is a levered play on Bitcoin. If Bitcoin moves into the end of the year, call it 15% to the 140,000 mark, MicroStrategy is easily going to get back to these all-time highs. Bitcoin at all-time highs and MicroStrategy not quite at all-time highs. That's telling me that the divergence in the name. That being said, guys, equities look good. Stocks look good. Risk assets look really, really good. Buy the dip because I do think stocks continue high into the end of the year. Guys, and diving into sentiment, this is the fear and greed index. Now, this is the crypto fear and greed index, and it's more indicative of what sentiment would look like for these high beta assets. And you think that we would be pushing into extreme greed? No, we're not. We're roughly where the CNN fear and greed index is at the 60 mark, telling us there is certainly room for the market to run. And that's generally what we get in a year when Q3 was up more than 7.8%, we tend to see those types of quarters in Q4 tend to be very bullish with an average return of 7.7%. And you could see a lot of the time we actually just make like double-digit returns. Absolutely insane. Only very few years where we were down, and even then, 2.2% for the quarter. Not bad, not super great, but not bad at all. And the truth of the matter is, we are starting to see flows broaden out throughout the market. When you look at tech and sectors X technology, right, global sector fund flows are pouring in. So we are seeing broad market breadth and money flowing into the broad market. That's exactly what you want to see in a market making all-time highs. When there's breadth in the market, that's really, really constructive. Now, looking at data tomorrow, guys, I don't know if we're going to get the initial jobless claims. I doubt it. There's rumors about the government shutdown potentially coming to a conclusion. We'll see what that looks like. But let's say we are to get the data. The consensus estimates is for 223,000, somewhere around there. We have a ton of speakers speaking tomorrow, as well as Jerome Powell. So everybody will be paying attention to him and what that means for the FOMC later this month. Looking at earnings tomorrow, we have Pepsi, Delta Airlines, Tilray, APLD, Applied Digital, and Levi Company. A big day for earnings, a couple of IPOs as well. Nothing on Friday, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.